everybody, it's Serene Education with the 4 major notes update for the 27th of June 2013. Okay, 4 majors, starting with Euro against US dollar this morning, using our FX8 Ultimate template, bottom right hand corner. Let's have a look and see what happened yesterday. Well, as I mentioned yesterday, after a breakout and pullback that we saw, we're bound to see further selling into the 38.2 fib monthly, and sure enough, that's what we saw. Getting below all of us, heading into that, and then we saw the consolidation last night on the US session open. Asian session this morning, bouncing on that 38.2 fib line as we speak. So as it stands now, for this to remain negative, we would need to see the 1300 mark being breached sometime today in order to see price heading towards those likely lows that we saw recently in and around here. For example, there's a major one over here at roughly the 1282.78 mark and change. So between the major support resistance now at 38.2 towards those lows, we're looking at about 181 on pips. So we would need to see a close lower than that. Looking at the indicator box, very indecisive. We have long-term the institution moving average below price on most of the pairs time frame. Same can be said about the RMO. Unfortunately, a bit more blue on the top than there is at the bottom, so the R squared is complementing price action intraday. Intraday, we're looking at close below that 38.2 mark. So if we go to our 4-hour time frame, getting a sell signal straight away. But if we look at what price action is doing right now, you can quite clearly see consolidative above the 1300 mark and above that 38.2 monthly. So it's imperative to see further swing lows, which is telling us we should be looking for negative sentiment. You can see the institution above price now. RMO below, MACD below, everything's looking fantastic. We would need to see this area being breached. Look to see if there's any fundamentals out today that could actually reflect on price action. There seems to be a lot for Euro this morning. We've got the M3 money supply year-on-year figures. We have the Italian 10-year bond auction, and we have day one of the EU Economic Summit. So I guess we can probably see, if anything, probably a bit of consolidation today because of that. Day one of the EU Economic Summit today, all-day event. So I presume long-term sentiment is going to sit here for a while over the next couple of days while the summit is in place. So as it stands at the moment now, would need to see a long-term bearish engulfing candle close lower than 1300 to see any further extensions. However, the longer we spend above this area here, the more likely you're going to see a bounce. If we do see a correction, the most likely area it's probably going to bounce to is probably back up towards that institution moving average on our 4-hour, which is roughly 50 odd pips away. So intraday, look for potentially consolidation. Maybe the US news this afternoon might play a factor. We have a lot of news this afternoon for the US market. They might factor in, but we would need to see a bearish engulfing close below 1300 to see any further trade opportunities for the remainder of this week. Sterling, let's have a look here again. A lot of negativity yesterday, as the same with its European counterpart, trading into that long-term monthly 23.6 February retracement area. And sure enough, on the Asian session, finding consolidation. RMO and the moving average indicator on the bottom here are very much tied in with each other, and the R squared complementing that selling that we're seeing intraday. So buying at the moment now on our smaller time frames, you can see a bit more positiveness on the hourly and 30 minutes, and that confines with the support that we're finding intraday here. A lot of indecision, and we saw the last 4 hours being bullish engulfing. So almost a morning star formation, slight bounce, and more likely going to be heading up towards that institution moving average, which isn't too far away from where price is right now. Good old 25 pips. So consolidating at this 23.6, which is the 15,300 mark, would need to see a bearish engulfing candle close lower to see any further negative sentiment for this particular pair. Same with the Euro. You can see the RMO is below the 0 line, so we should be looking for negative trends. And sure enough, we have seen a negative trend. You can see quite clearly swing low, swing low, swing low. And if we see any further opportunities, we might see it in this area over here. So sterling today, we have current account figures this morning, followed by the final GDP quarter-on-quarter figures. That's going to be quite interesting. Quarter-on-quarter GDP figures this morning at 9:30 GMT. So what to watch for sterling, as long as it maintains all below this price support resistance level here, the institution now for our look to see if price can break below this 23.6 February retracement here. Failure to do so would see a longer than normal consolidation. Maybe the US news this afternoon might factor into that. However, we want to see one or two things. We either want to see a break above the institution at 15,364 to see any further opportunities to the upside towards the 38.2 here near term, and then up towards these prior highs. Or the outlook would be, because it's still very much a negative trend, would need to see a break below the 22.6 here at the 5300 mark to see any further trades to the downside in the direction of the overall trend for this particular pair. US dollar Swiss franc, here again, if we see euro and sterling falling, there's more likely for the US dollar Swiss franc to be rising, and sure enough, we've seen that consolidation high, and we've seen price yesterday, the prior day, with bullish engulfing candle into the 50% Fib retracement. We wanted, as I mentioned yesterday, to see a break above it. We have had it close above this area. Now we want to see consolidation. So if we go to our 4 hour time frame, you can see the consolidation, and the 4 hours that's in play right now is bullish engulfing. Notice the indicator box very much positive intraday, and the R squared very much also moving with that buying sentiment. So as long as it maintains above 94090, above the 50% retracement, monthly retracement, we should see price moving towards that all important higher in the institution, moving high from where price is right now, and that's a good 44 pips away to that level. Swing highs is dictating upside. Swing high, swing high, swing high. Positive uptrend. RMO is above the zero, MACD above, but consolidative. That's going to be the norm because we've seen a price pull back here. We have to be well aware of where the institution is now on our 4 hour. We would clearly like to see a break and close higher than that, because then we're going to be able to be trading cleaner air to the upside. And if you look at where price is trading now, we have that all-time high right up here, from where this major support resistance level is to this monthly Fib retracement at the 23.6, and that's a good 353 pips away. So nice bullish engulfing closure of the daily would go a long way to so far as that we should be looking long term towards this area here at the 97.35.50 and change. US dollar Japanese yen on the daily. Let's have a look over here. Consolidation over the past couple of days. We've had a bounce on the 38.2 monthly Fib, and doing so we've been pushed above the weekly Fib at 23.6, and she's found support above here. Notice a lot of positiveness. However, the R squared intraday not really moving with genuine buying sentiment, and you can see very much consolidative. If I go to our 4 hour time frame, you can see consolidation because the R square is not behind price moving within this consolidative range. Ideally would like to see a break of this consolidative range, but we have to be very aware that the institution is still falling, and if we do get a break above this consolidative range, we've got to worry about that institution. We would need to be looking at there's still 86 pips or thereabouts to that level, but ultimately our next target would be the 50% retracement, our monthly retracement. So if we see higher highs, that's going to stipulate we should be heading towards this area, but we could use our first target being the institution on our 4 hour time frame, which still is a good 80 pips away from where price is right now. Swing highs depicts upside. Swing high, swing high, swing high. We have not seen any lower swings because price has been consolidative and not breaking or trading lower than 22.6. And each time she's been using this area as a support. So if price is not trading below the support, then it's not making lower lows. So we would need to see a break of the current high though. Price has been swinging lower. So the current high roughly around this area here, you can be quite strict and put the mark higher. It's entirely your choice. You could either wait for the break. This considered nice bearish bullish engulfing candle on the 4 hour would dictate a lot that we should look upside as long as it closes higher in this area here. Look to see if the R squared complements that. We would want to see the 15, 30 and hourly potentially returning to blue to have an all blue system, and if that is a genuine 4 hour candle bullish, then we want the R squared to complement that. If we do get a bullish engulfing candle move higher and the R squared remains red, ideally wait for the institution moving up to be broken and then target the 50% line. So as it stands at the moment now, we're looking for euro sterling to be looking for lower lows, US dollar Swiss franc for highs, and the yen to break out of this consolidative range before we look to trade to the upside or to the downside. So keep it very simple today, guys. Follow the rules of this particular template if you are using it. Back it up with sound money management and look at the fundamentals today. There's a lot of news out for both euro sterling and most importantly the US dollar. There's a hell of a lot of news out this afternoon for the US dollar. However, we have EU economic summit meetings all day today, guys. So any euro crosses sterling, we could see price actually consolidating. We might see a push later this afternoon, but with the EU summit, we could see price speculation running right, and because of that, we don't want to be part of it. So rather just stand aside and wait for price to come out either side, and then we can trade it for the remainder of this week. Have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, trade serenely.